Hello everyone, I welcome you to other video in V Investment. In today's video, I want to discuss about the effect of revised taxes on Indian stock market, some of the common questions raised by new investors in the past, my important learnings from the past, and at last, let's start with the important module financial analysis. I request everyone not to consider a recommendation or a financial tip to purchase the stocks covered in this video. I'm only considering these stock names as an example to explain my content. So let's get started. In recent budget from our finance minister, we can notice that the capital gains on our investment are chargeable at 20% if it is a short term and 12.5% if it is a long term. Short term is referred to as less than 12 months and long term is referred to as greater than 12 months of gains. However, future and options trader should need to face the double taxation. So considering in the tax point of view, we can say that long-term capital gains is more worth it in investing, and in the long run you can expect more profits from your invested companies if they are the good and potentially strong one. Some common questions which I faced from the new investors in the past are: what is a stock? A stock is a part of a company which you are purchasing through your investment. What is a stock market? It is a place where some of our Indian companies offer the tradable options for its investors. We have two stock exchanges in Indian market. One is being the Bombay Stock Exchange and other is a National Stock Exchange. BSE is the Asia's and India's first listed stock exchange. National Stock Exchange is the most tradable stock exchange by investors, meaning more sell and buy happens in National Stock Exchange. How to invest in Indian stock market? One can buy any company or sell any company by having a demat account through different brokerages like Zerodha, Grow, Angel One, or even banks today offer a demat account. I'm showing here the demo explaining how to buy and sell a stock through brokerages Grow and Zerodha account. Once logging into the Grow account, you can search a company which you are interested to buy through the search option, and after selecting this company, you can buy or sell it through these highlighted options. If you choose buy option, then please enter your quantity of shares, how many you would like to purchase and at what price you like to purchase. And please make sure you can select as a delivery or intraday as desired. If you want to sell a stock, then after selecting sell, again you can choose how many quantity you would like to sell and at what price. This is about the Grow, and once you sell the stock, that amount will get credited to your Grow wallet highlighted here. And at the same time, if you add funds from your bank account to the Grow account, the funds will be highlighted in the same wallet. The same explanation is valid to Zerodha as well. So these are some of the questions I thought to answer which can be helpful for a new investor through this video. To explain this topic, I'll take some trending companies which I invested as example so that it will easily be understandable. First one is Suzlon Energy. I invested in this company in the year 2021 with an amount of 12 rupees per share, and after my investment, the price of each share fell down to 8 rupees in the same year. And this price continued till another 1 year until 2022, and the company started to grow, and its price today is trending between 75 to 80 rupees per share. The second example I want to explain is Tata Motors. I purchased Tata Motors in the year 2021 with a price of 300 rupees nearly per share, and I sold in the same year at a price of 460 rupees per share. But today, if you see, the same Tata Motors is ranging between 1100 to 1200 rupees per share. And the third company I want to take as an example is Action Construction Equipment. In the year 2023, I purchased this stock with 360 rupees per share and I sold this company in the same year at 580 rupees per share. But if you see today, its share price is ranging between 1100 to 1200 rupees per share. I took these three companies as an example because seeing some profits on my invested amount, I sold my companies without waiting or reviewing properly in the past. So I want to highlight this as a learning to mention that if you want to exit from any company, keep a review at the future options, what it has to grow and to generate wealth for investors like you. The second learning what I want to highlight is taking the same example of Suzlon. I purchased with 12 rupees in 2021 and later it has fallen down to 8 rupees per share and it continued till next 1 year. But I still kept patient because of the goal I have. It grows for future and I sold it 1 year back at the price range of 37 rupees per share. But again I entered this year with the purchase price of 57 per share. So this is also a learning for me, not exit from a company without review. So I want to conclude saying that if you maintain a psychology of goal-oriented focus, patience and frequent reviews and get the timing of buying and selling a stock at proper time, then definitely you can be a good investor in your journey. I hope you will keep these learnings added to your bucket. I want to explain basics of financials today by explaining the different types of businesses what we have in the world. Any business or any company can be classified in below three categories. Structural business, that is evergreen business, cyclical business, seasonal business. Companies belonging to consumer goods segment like Dabur, ITC, DMart, Zomato fall under the structural businesses. However, the business like steel, paper fall under cyclical business and companies like Wonderla or cool drink beverages fall under seasonal business. When any company reports continuous losses in its financial statements when compared to previous year and still the price of the stock is increasing, then it is known as pump and dump situation. As an investor, we should be far from the pump and dump situations. But if the same company is winning the order in spite of reporting continuous losses and the government is extending support for the growth in those sectors, then definitely that stock prices will be increasing. So please consider before taking judgment. How we can predict a stock can be future promising. When the stock or a company is raising continuous funds through its debentures or warrants, or company is expanding its business or launching new products or winning the big orders, or if company management is changing with a new hunger ones and new professionals with experienced, then definitely we can expect those companies can be future promising. But however, we should keep a continuous review or judge this is happening. So that's it for today's video and I will see you all in the next video expecting to be published in the next weekend with a detailed financial analysis. Thanks for watching. Until then, take care.